So, good morning to all our online viewers, and thank you for joining us today. The topic we'll be discussing today is portfolio diversification, and you consider simply reinvesting in your business. And this is brought in association with JMMB Investments, and is being hosted here at the Trinidad and Tobago Chamber of Industry and Commerce, and this is part of our Business Insights webinar. So, first, let's introduce our two panelists. On my left, we have Ms. Adeline Frank, Senior Manager for Business Banking. And on my direct right, we have Roshan Basdeo, who is Brokerage Services and Sales Manager. So without further ado, we're going to start the conversation rolling with Ms. Adeline Frank. So tell us a bit about portfolio diversification and the benefits of reinvesting both inside of your company and outside.
Thank you very much, Savona. Good morning to all our viewers. So we've worked hard all year as business people and we have made profits. So what do we now do with our profits? Reinvesting profits has a number of benefits. So we'll go through the number of benefits and then we'll go through how it is we actually go about reinvesting these profits into our company. So we all know what we want for our companies, and in order to reinvest the profits into your company has the immediate benefit of giving you the capital that you need in order to do so, so that you do not necessarily have to approach a bank or approach investors in order to achieve your goals. So it allows you to plan for what it is you want to do for your business and to achieve that probably over time without approaching a bank, thereby not increasing your interest payments and thereby increasing your profits again at the end of the day. So it's a nice little cycle that you have going. In terms of investors, because you have some business people that just really do not like to approach banks and they prefer to seek outside investors to invest into your company and therefore give you the capital and the funds that you need in order to reinvest and to achieve your goals. You know, let's think of Shark Tank. So you have your investors and they have a panel and you sit and you present your product, you present your business, and one of the investors goes, I love your idea and I'm going to invest with you, but you have to give me 90% of your company. So you lose the ownership of your company. So having your profits and reinvesting your profits into your business allows you to avoid as much as possible a situation like that. So you're able to keep the ownership and the control of your company as well. It also strengthens the financial position of your company. So if you look at your financial statements, should you really need to approach the bank or to approach investors, the profits that you reinvest go into your balance sheet as retained earnings and therefore bolsters your balance sheet, so that the banker or the investor that's looking at it, your business will be more palatable. Okay. And therefore the chances and the possibility of them actually agreeing to assist with you achieving your goals will be greater. You can also use your profits to reduce your debt levels, especially in these economic times that we're in. You have a lot of businesses with even your small and your large corporations looking at ways to reduce the expenses of the company and tighten up to make sure that your profit levels remain at a certain level, or you can even increase them in these times. So some businesses are looking for consolidation and ways to reduce your debt. Okay. So you can use your profits to pay off one of your loans or so, and therefore reduce your debt levels of your company. You can also use your profits to invest, and that's where Roshan comes in a little later to tell you how it is you can invest outside of your company and therefore give you additional streams of income coming in to increase again your profitability at the end of the year. So really it's all about um, reinvesting into your business, looking towards your long-term goals and the success of your company.
So that's great. I got a whole new light on how investing or reinvesting into your company actually helps you to attain those long-term goals or objectives. But is there a set formula, set methodology a company or individual goes about to reinvesting profits? How does one look at doing that?
Okay, and that's an excellent question, because there's no set formula. It all depends on your business, on what it is you want to achieve. So what we say to our clients is we say, be strategic. Okay. You know what you want for your company. You know where you want your company to be and what you want your company to look like in the long run, because that's why you got into business, right? And especially with the micro and some of the medium enterprises, um, you have a lot of the owners and the business people with these goals in their brains, and they're working towards it. Yes. So what we say is put it down on paper.
Okay.
Come up with a strategic plan for your company. Start with maybe 5 years, because yes, a lot of us say we're not able to see longer than the first 6 months. But at the end of the day, we know where we want to eventually see ourselves and see our company. So start with the first 5 years and then break it down into 1 year periods. And in breaking it down into 1 year periods, then we can sorry, in breaking it down into 1 year periods, we can get details. So we say make a like a cash flow statement, what us bankers like to call it. So list all your revenues, all the sources of your revenues, and then list your expenses. And be as detailed as possible with your expenses, because you want to come up with the figure at the bottom that you can use in order to reinvest into your goals. So let's say you want to construct a warehouse somewhere in central because it's closer to your distribution stream. How much money do I have that can actually allow me to build this warehouse? So when I do approach the bank, I approach the bank for a smaller amount.
Correct.
And we need to make sure then that the amount that you say that you have, you can continue to run your business. So you have all your expenses that are covered. So be strategic, make a plan, and therefore come up based on what it is your company has to do over the next year with the amount of cash that you have available in order to reinvest.
That's a good point. Should a company consider anything that's unforeseen, certain intangibles that it can't really account for cost-wise? Or how do you take
Oh,
that?
of course, because nothing ever runs according to plan.
Okay.
And unforeseen circumstances always happen. So that's why we ask to be act the detail in your expenses is what's very, very important. And therefore, when you really think to that granular level, the possibilities are still there.
Mhm.
However, it's minimized, and then you can always put in a contingency cost at the end of the day in order to before you come up with your final figure. you know and when we coming up with the expenses, some of us may want to reinvest in, let's say, like a marketing campaign, so we get our name out there a little more and therefore be able to increase sales. So when we want to invest into intangible items, then what we say is make it tangible,
Okay.
because what gets measured gets done.
Correct.
So your marketing campaign, how many leads do you expect to come out of that campaign? And from those amount of leads, you might get 100 leads. Do you expect 50 of those leads to actually turn into sales? So that you put your money into it, yes, but at the end of the day, you have to be able to measure whether or not it actually brought you the benefits that you wanted in the first place.
That's excellent. So let's just do a little quick segue. Adeline, thanks so much for that business banking point of view. So let's just segue straight into Roshan. Now, Roshan, portfolio diversification and your business. Let's hear the investor or the investment side of this. How would you treat this?
Well, as Adeline rightfully pointed out, businesses do go through certain life cycles, and there are unforeseen circumstances that we need to cater for.
Mm-hmm.
So, having a contingency fund, or perhaps having a diversified income stream from your traditional form of business,
Mm-hmm.
would help to mitigate, or I mean, reduce that. So we will try to cover, why should companies diversify. We would go through the different investment options available to them in the form of the different asset classes. We would also kind of try and cover it from a portfolio perspective. How does one build a diversified portfolio? And of course, what are the risks of reinvesting in your businesses only? Um, well, why diversify? There's a lot of unpredictability in business, as we best as possible. We have a strategic plan. We know where we want to go, but no one has a crystal ball. So in order to minimize your losses in a downturn, or even increase it in a boom, it's always good to have that contingency fund, but it's not supposed to sit there and lie idle.
Correct.
We need to employ that capital as well. So having that fund set aside helps reduce the volatility of your traditional investment portfolio over time, and it helps to maximize returns by investing in different areas that would have each, or probably each, react differently to the same event. And a good example would be, let's say we had Brexit. Um, in that one event, the pound fell, but yet the yen went up.
Correct.
So there are different reactions to the same event across different asset classes. And when we talk about diversification, we would go and we would further break it down across different sectors, such as industry. And this approach helps to add the mixture of industries to a portfolio, with the idea that, for example, investing in a technology sector might be more beneficial than investing in the banking or energy sector. You could further diversify your portfolio according to geography, which would stretch across economic and geographical territories. So do I invest in the US versus investing in China, or perhaps maybe, Great Britain or Europe? You further break it down now into asset classes, and we would cover those different asset classes shortly. And this method across, investing across different asset classes helps to reduce, or helps assets that perform differently over time. For example, in times of recession, bonds and certain commodities tend to strive in relation to equities. Currency, I mean, you have different exposure to different currency classes, which would help mitigate exchange rate risk. And for example, you're not exposed to any one single type of currency. I mean, there's a lot of talk in Trinidad about our currency being devalued. And of course, what does that mean for companies locally that have a greater percentage or stream of income in TT dollars? Do they need to consider investing or in assets that are domiciled in US dollars, or to create that flow of US dollars for them? And of course, one of the more, perhaps the most important factor to consider in terms of a diversification strategy is the time factor involved in your portfolio. Risk and time are closely correlated, and it's usually best that you spread risk over a greater period of time. And your strategic goal or direction that your portfolio will take depends on that time factor that you have. So in terms of the different asset classes, we have equities, which, most of us would know that we have a local stock exchange that has a number of some of the locally listed companies that investors could participate in. Equities tend to offer a more long-term perspective for investors, because you have all of these different fluctuations in prices over time that investors would need to ride out. And while you're waiting for, of course, capital appreciation, you're rewarded in the form of dividends. Another asset class that investors, companies that could consider in investing would be bonds. Bonds provide, unlike equities, provide us a steady income stream. Because, irrespective of profitability, bondholders are paid, before the common ordinary shareholders. Property is another form of or asset that persons could look to. Again, property being much more long-term in nature. You could probably invest in retail office space and other infrastructure sectors. You can invest probably in international local properties. But the mitigating factor here is to understand that there is a time factor associated with investing in this asset class, and it may not be as easily converted into cash as other.
Highly illiquid, as we like to say.
Well, it tends to be, depending on the state of the market. And of course, cash, which would form the basis of any portfolio. Cash is king, and it affords you the opportunity to switch easily in and out of any one of those asset classes previously mentioned. So in portfolio construction, as we said, you tend to take into consideration the time factor that will help you determine the mix of assets that you gear towards. Obviously, if you have a short-term time horizon in mind, short-term usually being a year or less, your focus would not be in as much riskier assets, but would probably be in a safer, lower yielding asset. Because you would measure that in your risk versus reward. Of course, usually the longer time frame that you have would determine the aggressiveness of your portfolio. And as I said, what will determine that construction is, of course, your portfolio goals, your investment time frame, and your attitude towards risk and reward. Basically, meaning even though if I have the ability to take on risk, it doesn't mean I necessarily want to as a person,
Mhm.
right? And I mean that asset allocation will change as your personal situation changes. So for companies that are a little more conservative, and may have a shorter time frame, a conservative portfolio would probably make a lot more sense. And conservative meaning a smaller percentage in less risky assets, such as bonds that have a predetermined cash flow or predictability of cash flow that companies would probably use in planning their future goals and other projects outside of this investment income. A slightly more moderate or portfolio would probably have a greater or equal weighting in either bonds or equities, and a smaller weighting in cash. And of course, for the more adventurous investors, there's a greater emphasis on the equity asset class versus bonds and cash. So, I mean, some of the risks, investing that excess or additional cash that you have provides an additional income stream for companies in the form of investment income, right? And that in itself would help reduce their exposure going forward to these boom bust cycles that we currently experience in economies.
Okay. So I'm thankful I got two varying but similar sides of the discussion, which is portfolio diversification. But something that came out on both sides, and I'm going to throw this question at Adeline first and then carry it over to Roshan. You spoke about diversification, and that diversification has the opportunity to mitigate or to spread risk relatively thinner over some degree of time. But would you say that spreading your risk or diversifying has the same effect on one's gains? Does it dampen it or does it increase? How would you answer that?
Well, diversification, as you rightfully said, is all about spreading your risk in order to maintain at a minimum the amount of gains, the amount of profits that your company makes. So the overall goal and aim of any action that we take as business people will be to increase our profits at the end of the day. But worst case scenario, minimum is to maintain. So diversification for a company um, can be, it doesn't have to be you're going into a completely different industry. It could be as simple as adding another product
Okay.
to your mix based on
Example of that is
opportunities.
like what?
An example of that could be like okay, so let's say you manufacture paper bags,
Mm-hmm.
and we see it more and more where the supermarkets and some of the fast food outlets are moving away from these branded paper bags, and you're getting the plain bags now, and it's all in an attempt to cut costs and therefore increase your profit. Sorry. So you as a paper bag, obviously a branded paper bag will cost more than a plain paper bag. So you can approach a supermarket, for example, and say, okay, so you're moving into these unbranded paper bags, but brands have they have benefits, and you have a culture now where we are becoming more environmentally conscious. So let me still give you the unbranded paper bags, because you'll still always have people who come for the one-off things and need the paper bags, but I can do these reusable recyclable bags that we're seeing now, and put your brand on it.
Yeah.
So persons, they buy it once and they can reuse it, and they wouldn't just use it when they come to the supermarket. If they have other items or other places they want to go and they need a bag, they use it. So what it does is it expands the reach of your brand. So you therefore become a solutions provider for your clients, while in the same time adding another portfolio, another product to your mix.
It's an excellent way of looking at it. I think particularly for SMEs within the chamber and even outside the chamber, that could be a viable option to diversifying your portfolio. Now, Roshan, from the investment perspective, do you believe that diversifying does spread some risk to some extent, but does it have that same dampening effect on gains? How would you answer?
Actually, it may be the converse, whereby having a diversified stream in the form of investment income may
Mhm.
actually help you to increase your gains over a period of time. right? And of course, that depends on your horizon and your goals and how you determine your mix of assets as you go forward.
Okay. Next question. This is for Adeline. You said that there's no set formula for a business or for an individual to look at diversifying their portfolio. But some companies, particularly SMEs, as you alluded to, may do everything themselves, and cash is really critical in their businesses. What advice would you give to an individual or to a small company to think about reinvesting outside of their business, and why?
Okay, so as you rightfully said, SMEs are usually a one person operation. So you have bottle cook and bottle washer all in one,
Mhm.
right? You have one person who's doing marketing, who's doing sales, who's actually running the operations of the company, and it while this person is taking the entire life and putting it into this company, what the diversification into the stocks and the bonds and so can have the benefit of bringing in that additional income stream, which is on the side. So they don't have to put out any kind of effort. Leave the effort to Roshan and they. So they can go ahead, continue running your business, and you have this additional income coming in. So let's just assume, God forbid, that something happens and the person gets sick and they have downtime, then they can rely on this income stream that's coming in from the investments in order to continue running the operations of the business.
That's a good question. Now, Roshan, I know that when firms diversify their portfolio, and it's applicable even to individuals, a thing that pops into your mind is that, okay, I'm diversifying my portfolio. How does this implicate me in terms of tax? How would you allay some of the fears that an investor may have, or a company may say, well, okay, I'm diversifying across all these equities, bonds, treasury bills.
Mhm.
Do I attract more tax or do I attract less tax?
Well, again, the different asset classes would have their own inherent and specific tax liability concerns. And that mix, of course, will probably be determined to the best benefit of the company and perhaps even reduce their overall
Okay.
tax exposure, dependent on the mix of assets that they choose.
Okay, but that's key to know, because in this economic climate where persons are literally trying to consolidate and save as much as they can, to hear you have an additional tax burden, that's something you may not want to have to
Correct.
endure.
Correct.
Now, Adeline, from your business banking perspective, if it is a company approaches you and say, here, what I would like to diversify my portfolio, I would like to see how best I could get to point X 5 years down the road. What are some of the factors, or what are some of the indicators you would tell that person to factor in? Because you spoke about a development plan, a strategic plan. What are some of the factors they should take into consideration when investing?
That that for business is a very interesting question because of the fact that no one business is the same.
Hmm.
So in order for me to answer that question, I will have to say it depends on the business.
Okay.
So it really depends on what the business is, where it came from, where what was the plan for the business going forward, and then we can sit and tweak. So in that instance, I would really, if somebody comes to the bank to ask that question, I would really say, let me come and sit with you and meet with you and go through exactly where the business came from, what you're doing now, where you want to go, and then we can really sit and see what is the best option.
That is all
Yes,
tailored to the actual needs and goals of the business
of
at the
the
point in
business.
time.
Yes, because no one business is the same.
Okay, understood. I think that's a valid and a well taken point. Now, Roshan, I know you into investments and you know about looking at a company's profile and where they want to be, but viewers may have this question in mind. What does a well diversified investor or business look like? Is there such a thing?
Well, I mean, diversification, firstly, I mean, as it relates to businesses,
Hmm.
really speaks towards their finding that additional revenue stream. Um, so in terms of a portfolio, there's no optimal portfolio that could be applied across any one institution, business, or even an individual.
Hmm.
That depends solely on the goals and objectives set out by the company and what they want to achieve from investing.
Okay, so it's all contingent on, as Adeline alluded to,
Yeah,
the company at point in time.
exactly. It's really company specific. Yeah.
Understood. Now, Adeline, you mentioned a very interesting point, and some businesses may want a little more clarification on this. You said that investing in or reinvesting in your business has the potential to reduce a company's debt risk. How so?
Because if you have additional, okay, so let's assume a company is, so you have profits that you have made for the year, right? But given the economic climate that we're in, the company has said, okay, I have plans to expand, but let me just hold off a little bit and see exactly where the economy is going. You know, we have some people that say that coming into the second quarter of 2018, we should be able to see an uptick in the economic performance of the local economy. Um, but some people are still very skeptical about that. So let's just say a business owner says, okay, so let me wait a little bit. Then what do I do with this excess cash?
Okay.
Yes, cash is king, but you also don't want to have cash sitting idle. You want your cash to be working for you. So one way in which you can do that is you can actually look at your debt profile, the amount of loans that you have at the bank, and say, okay, um, maybe you could have the conversation with your banker as well. Bring them in one time and say, you know, I have this cash here. I have X, Y, and Z amount of loans. Maybe we can look at consolidating it,
Okay.
or we can look at taking your excess cash and reducing the amount of debt that you have at the bank, your bank loans, pay off one, pay off two, and consolidate the rest. Or maybe if you have sufficient cash and you really feel that you want to do it, maybe you can pay off all your loans in your bank.
That's good. Now, this is a heated discussion, and actually, we got one of the questions from our live chat. Um, Somebody asks, being a moderate investor, how many stocks should be bought in order to reach an optimal diversification? I think it's a good question, and it could be straddled on both sides. So, Rashan, let's see you tackle this.
Well, I mean, again, what a moderate investment portfolio would have is usually a fairly equal weighting either in bonds and equities being stocks.
Mm.
So probably maybe a 45 to 50% weighting in equities would probably be a fairly moderate or diversified portfolio, with the other component being fixed income. Um, that would help mitigate any risks associated with the equity side of the portfolio,
Okay.
to give you a kind of a very good balance.
And Adeline, from a business banking perspective, businesses would the same weighting apply? 45%, let's say, in bonds or stocks, sorry, versus let's say 50% in bonds and the balance in cash. How would businesses toss that up?
Well, I, I would say it sounds like like a fair percentage. Again, it depends on the risk appetite of the
Business.
business and the business owner itself.
Okay. So coming back, one thing I want to know, when you diversify your portfolio, oftentimes there might be certain returns or certain gains, but does one make the assumption that the returns that come from diversifying your portfolio, is it commensurate with the risk? How do we evaluate that? Adeline?
Yes,
It is?
it does. I mean, you know, the more risky assets are the ones that give you the higher returns.
It's
It's
risk
a,
versus reward.
yeah.
Mm. Okay. And we have a next question coming in from our live audience. It asks, given the current market situation, which is our economic downturn, what is your recommendation exposure to the local market? And you alluded to the fact that we do have a local stock exchange. So should a person consider buying some local stocks versus foreign? What would you
Well,
say?
again, we've that could be answered really in two parts, because I mean we have a challenge also in finding currency.
Mhm.
It's no secret, finding USD is a challenge in Trinidad. So even if you want to consider the option of investing outside of Trinidad and Tobago, there's a real challenge there. So where it's a great strategy, firstly,
Mhm.
obviously, because again, you don't want to be too heavily exposed to the TT market when there's an expectation that, and there's a lot of talk, I mean, amongst economists and financial analysts, that the currency probably should be devalued somewhere maybe closer between $9 to $10,
Mhm.
um, even being bandied about by the IMF. But um, so you don't want to be too exposed to a market or
Okay.
any market, whether it be
Mhm.
Trinidad or otherwise, that's on the decline. So yes, you should diversify away from it. Um, but again, that situation has its own set of
Right,
challenges.
so demerits. And
Mhm.
Adeline, from a business banking perspective, how often do you see local businesses in Trinidad and Tobago actually stepping into the local stock exchange? Is that something common?
No, not really. Not
And
really.
what would you say accounts for that? Is it their risk aversion? Is it their comfort levels? What would you say accounts for that?
Well, again, you see, diversifying outside of your business is something that is relatively new, especially to the smaller businesses. You know, you have your larger corporations. Yes, you will find that they have a portfolio outside of your actual business itself. But as you rightfully said earlier, you know, you find more of your SMEs um, tend to focus on plowing back into your company
Correct.
and growing your company in such a way. So the idea of diversifying your portfolio outside of your business is one that is new and is really worth looking at.
Okay. We have a next question coming in from our live audience, and it goes, what are some key factors businesses should take into account when diversifying their portfolio from your experience? So, Roshan.
Well, the most important factor would obviously be time, meaning what they want to achieve from the strategic goals and objectives set out in the company's strategic plan.
Mhm.
That would determine how much of their revenue streams happen outside of the business
Mhm.
in the form of investment income and what risks they take.
Okay. And Adeline, is it different for businesses in Trinidad from this banking perspective?
It's the same thing. It all depends on what the goals are for the company and what it is you want to achieve and over what length of time you would like to achieve it.
Okay. One question always like to ask persons, and I'm gonna ask it here. So I want to invest, I want to diversify, I want to see how best I could secure different streams. How do I do this? What is the avenues? What is the outlets? Let's say I'm totally new to investing. How does one do this? So from a business, and then I'll get from an individual investor. How does one start this process of investing?
You start by calling your banker and Ocean. No,
So
but no, but really, really and truly, you know, you really have to. If you're new to this, you really first time that you're doing it, it really is advisable that you speak with someone.
okay,
And I mean, I started off with a little joke to say talk to your banker, but your banker really is the person that you should be talking to.
okay,
You know, because your banker is literally supposed to be your financial partner.
okay.
So anything that you're thinking of doing with your business, call your banker, have a chat, and if you're looking to diversify your portfolio into stocks, into bonds, then we call we call Roshan and say, Roshan, you know, we have this business that wants to do this. Come in, let's have a chat, and we take it from there.
Okay. So Roshan, your
Well,
experience.
she's exactly quite right. You need to have a trusted financial partner, and if that person usually is the person you go to mostly for guidance, it usually starts with either being your banker or your financial advisor. And I mean, what we do at JMMB Investments is exactly hand holding.
Hmm.
You know, we take you through the process of what's right for you,
Okay.
depending on your goals and what you want to achieve out of investing. So let's say you know, in my case, my daughter is 9 years old.
Okay.
So I know in 11 years' time, probably 10 years' time, I'll have to start thinking about university fees, right? So I have a 10-year time horizon
Okay.
in which to play with. So that would determine how much money I need to set aside each month um, towards her education and what asset classes I choose, right? Having that benefit of time to get that optimum portfolio mix that will help me to get to that point. Now, that's on a personal level, but the same could be applied to businesses,
Hmm.
right? Because their goals and challenges would be different.
Well, I think this question was answered before, but just to reinforce the point, the person on our live stream is asking diversification reduces risk, but this is based on the assumption that the expected return of each asset is always in proportion to its risk. How do we tackle an assumption like that? Is it that when you diversify, you are supposed to get higher returns, or is it a case of luck and chance?
No, well,
Well,
I think to get to that question, I think it really depends on your choice of assets and your mix of assets,
mhm.
right? Again, which boils back down to the individual and, of course, well, in this case, the business and their ability to take on additional risk,
Hmm.
right? I mean, where you choose to put your money, right, obviously has a lot to do with the return associated with that
Mhm.
particular asset,
Okay.
right? but each asset has its own inherent set of risks,
Mhm.
right? I mean, in this case of equities, prices move up or down,
Correct.
right? But while you're waiting for capital appreciation, you're rewarded in the form of dividends, right? Again, dividends are based on company profits, so it's not guaranteed. How do I mitigate that risk? I could choose to put equal or greater weight in bonds that have a fixed return,
Mhm.
right? So this asset allocation model does tend to help reduce risk
Mhm.
over different asset classes and have that overall reduction in your portfolio. So that's why diversification is the key.
Okay. And I think this would segue to this next question the person is asking. They're saying, what are possible tax implications from diversifying your portfolio? And as Roshan alluded to, and I think, Alan, you did speak to some of this points, depending on the mix or that nice melange of assets, there will be different implications tax-wise. Some assets may attract a higher tax, some may not.
Mhm.
Is that rarely the case?
Yeah, each asset class
Has
has
its
its
own.
own tax implications as well. So it really depends based on the conversation that you're having with your broker. What asset you choose to invest in at that point in time will have different tax implications.
A question I have for you, Adelaide, because I found it interesting. You said that when a company is considering to reinvest, whether it be within the company or outside the company, you spoke about a development plan or strategic plan, and based on that, they will know how to reinvest. What are some items a firm should consider in this development plan and why?
Okay, so your strategic plan is all about where you want your company to get to and how do you get your company there. So it's like building the road,
Okay.
right? And in building the road, you need to take into account the stopgap measures. So, okay, I want to increase my sales by 100% within the next year. How do I do that? I go into an advertising campaign. The advertising campaign, how do I do that? Do I go into print media? Do I go into television? Do I go billboards? Um, and is it that what based on the avenue that I want to go, or we need to do research firstly into the different avenues. So is it that the billboard, while it's on the highway and you have thousands of people passing and see it, is it that you're going to actually have more viewers if you get a prime time spot
Okay.
in the night on the television? And out of that prime time spot in the night on the television, how many people actually are going to visit my establishment
Okay.
the next day? So therefore you turn it into the amount of leads based on the amount of people that coming into my establishment, how many of them are actually going to buy? That's the kind of detail that you need to get into
Okay.
in terms of your strategic plan. It is your goal and building the road with the foundation to get to where you want to go.
Yeah, that's critical. Now, Roshan, you said that in most asset classes or most portfolios that you would build for some of your clients, that a percentage is cash. Now, there's a statement that a lot of businesses like to use, cash is king. And if it is a business is comfortable with doing the normal run-of-the-mill operations, why should a business take a percentage of their cash and reinvest it outside of their business when they're comfortable with their day-to-day operations? Well, what advice would you give to businesses like that?
Because of the unpredictable nature of these business cycles. I mean, even now, where we currently experiencing a downturn in our economy, companies that are closely linked to consumer goods and where spending is heavily reliant on the products that they produce, and profitability would be affected in situations like this. So how do they mitigate that risk? Having a percentage of your income coming from investments or investment income would help that, right? Because now you're not only reliant on how many sales you make, but of course you're getting returns from these investments that you would have made maybe X amount of years ago.
Okay. We have a wonderful question coming in from Tamara. Thank you very much, Tamara. It says, how safe are local currency bonds as an investment given the current state of the economy, level of international trade, condition of the Board of State Enterprises, depletion of the Heritage and Stabilization Fund? This is a weighty question. So, Adeline, I'll pass it off to you.
um, this really talks about the confidence that
Mhm.
persons have in the economy, and whether or not our government will pay its debts, literally,
Okay.
right? And that's what it boils down to, the possibility of the government not paying its debts or paying its debts, because whether the economy goes good or goes bad, at the end of the day, no government that anywhere in the world will ever want to really default, and will do all that is possible. So it all depends on the confidence of the economy, right, Roshan?
Yes, it does, and more importantly, it's in TT dollars, which the government could simply just print more of,
Yes.
as opposed to getting US dollars. It's bad for inflation,
Correct.
but they could, yeah,
And that ties into another point that you alluded to. Some economists, some financial specialists all allude to the fact that the TT dollar may slide. So coming back to Tamara's point, and even to tie it back to Adeline, it ties back to confidence. If it is you're not
Yes.
confident in the economy, you're not going to invest. It's as simple as that.
Correct.
A question I have to ask, how are the investment goals of a business different from that of an individual? Are they similar? Are they aligned? What is the difference?
Um, I would say not really, because it all comes down to what it is you want to achieve out of making your investment. So as Roshan had said earlier, as 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 an individual, he has a goal 10 years down the road of being able to send his daughter to university, whether she wants to go to a local institution or she wants to go abroad. So that is his goal at the point in time. A business may want to say, okay, right now I'm renting an outlet, but 10 years down the road I want to be able to own my own property and have people renting out of my property. So how do I get there?
Okay. And Roshan, do you see any sort of divergences between individual investors that come to your office versus a business, or do they sync the different goals?
no, I think there is some degree of there is some degree of divergence. Yes, I mean, from an individual, you would have slightly different goals. They may be more personally linked, but I mean, a business generally, the main goal of investing is creating that additional income stream outside of your traditional sales. Because it would be nice to know that, okay, I have an investment portfolio that, let's say, with $1 billion, and the average return is 4%, which means I make $40 million before I put on the lights to produce a single shoe or whatever it is I'm manufacturing.
Okay. So I think that fairly answers the question. You're saying in essence that individuals or business, there is some point of divergence, but in all, the different trajectories at some point in time align, if that's what you're saying, right?
Yes.
Okay, and then one question I want to ask, you alluded, Adelaide, in your presentation that some businesses, particularly the small, very micro enterprises, they do everything. Whilst I think Adelaide again, or a bit of Roshan, alluded to the fact that uh, bigger companies, they may have an actual department that deals with investing and actually diversifying their portfolio. Given our investment climate, what are some key factors a business should take into consideration? So, for example, the threat of devaluation. That's something that's forefront of their mind. How would you allay some of those fears, Alan?
Well, it it really again comes from weighing the risks and the rewards that you expect to get out of the portfolio that you're getting into. So it's all, to me, is all about talking talking to your advisor, and finding out, this is what I want to do, this is how much I am willing to lose, and this is how quickly I need to get it done.
Okay.
And then you and your advisor have a conversation, whether it is you as the individual business owner, or it is you as an employee in the investment company. The goal of the business, and the speed with which you need to get to that goal, really would drive what it is you do and what assets you invest in.
Okay. And Roshan, any take on that, sir? what should a business always, or what should an individual always keep to the forefront when they're looking to invest, given our economic climate, such as like said risk like capital flights, exchange rates. What should they keep in mind when they're looking to invest?
So one of the main concerns that whether it's your business or an individual face right now in Trinidad is that threat of devaluation and that effect that it will have
Mhm.
on your current investments. So you mitigate that by finding additional revenue stream outside of TT dollars.
Mhm.
So whether it be, of course, the most common form would be US
Mhm.
dollars. How do I go about doing that? I mean, even on our local exchange, there are a couple of companies that pay dividends in US dollars. So that could be a way for people to diversify the stream. Or you probably go out and buy an international bond that would give you cash flows in US dollars.
Okay.
Mhm.
There's a trend that's happening often. I'm not sure if you know, but I'm going to throw it out there. And I don't know if it's tied to portfolio diversification. You may like me, you may school me otherwise. There are a lot of youngsters who are actually engaging in forex trading, whether it be online. They actually mine certain types of cryptocurrency. Would that fall part of this whole discussion of portfolio diversification, or is that a separate entity by itself?
I'm seeing Roshan is very eager to answer that. So take it away,
Let me
Roshan.
just say that whilst I have nothing against people seeking opportunities,
Mhm.
I'm concerned with the fact that these products and services are largely unregulated,
Mhm.
and that poses a significant risk to investors that they need to be mindful of. It might be nice to go in and create an account and see a true 400 US in your account day to day,
Mhm.
and but should there be a situation where it's the converse and you're now in the red, what's your recourse as an investor?
Correct.
And that's again a risk that every person should be mindful of that engages in that type of activity.
Okay. And
Correct.
then any business banking perspective on this?
Correct. Um, again, we need to make sure that whatever activity we undertake, in order to, because at the end of the day, it's all about making profits and making money. Um, we need to make sure that one, we do it within the ambits of the law. um, we also, as Roshan said, we also need to make sure at the end of the day that no matter how risky we are as individuals or as companies, um, that we need to also, because we don't operate in a bubble. You know, we have different persons and different entities that we need to take into account. You know, you have your investors, you have your shareholders, those of us who have shares on the stock market. We need to take these different persons and these different entities into consideration, so that whatever it is we do in order to increase profits, we need to make sure that we are covered
Okay.
and they are also covered.
I think it's a fair discussion and fair points on both sides. Now, just to summarize everything, from a business banking perspective and from an investment perspective, we're saying that there's a need to diversify, and diversifying does mitigate some risk, and there are some associated gains. However, depending on the portfolio mix, you would definitely attract certain tax implications because each asset does have its own tax weighting. You also said, Adeline, I think it's a key point that there is no ideal formula when you're looking to invest. It based on, as Roshan said, your investment goals, where you would like to be, and your amount of risk. I think that's key to understand. Risk is always a part of investing. So if you were to summarize, I'm going to use three words. What are three key words or terms a business or an investor should always keep in the forefront of their mind when investing?
I would like to say it in one phrase: it's long-term success.
Okay, long-term
Long-term
success.
success of the company. Um, long-term success of the company.
That's actually three words. Long-term success.
Okay, great.
Rashad, any final closing thoughts? What are some
Well,
terms you should keep to the forefront?
whatever you do in terms of investing or growing your business, always understand that there are risks. We can't eliminate them, but through diversification, we could certainly help to reduce it. So whatever decisions you make should clearly be driven by your risk versus reward philosophy.
Perfect. So We have one more question. I think this is a heated topic, so let's not close the discussion just yet. So we have a Shalana asking, what has been the impact thus far of Moody's credit rating downgrade, especially from international investors, sorry, are they selling any light of the downgrade? I think it's a perfect question. We got two downgrades from both S&P and Moody's. So Roshana, throw that in your court,
Well,
please.
what would tend to happen is that yes, you would have an initial sell-off from a market reaction, people getting scared of maybe emerging market debts, and
Mhm.
but again, to speak to the long-term confidence of the Trinidad and Tobago government, they will not want to default on an international bond.
Okay.
So there certainly are inherent risks as presented by both credit rating agencies, which the government is mindful of and taking steps to reduce.
Okay. And Adeline, taking Shalana's question to point, given we've suffered or faced two downgrades, have you seen any businesses or any sort of knee-jerk reaction in terms of selling off assets? How has that been so far?
What we found is a lot of business owners are being a lot more mindful of what they do and when they do it.
Okay.
So we all have all have their plans and their goals and so. And initially, I found a lot of them saying, "Hey, let me just kind of keep those expansion plans to my chest
Okay.
a little bit. Let's see what happens." And then gradually, what we've been finding over the past couple months is you start to see some release.
Okay.
And that is what we need in order to get the economy going, because everybody has everything tied to their chest, nothing is happening. You have a
Yeah.
standstill economy. But we need to get things moving in order to really rejuvenate what's happening in the economy and boost us.
So thanks for that last minute question. So just to wrap up, I want to thank all our online viewers for tuning in to this session of portfolio diversification and consider the risk of reinvesting in your own business. I want to sincerely thank both Adelaide and Rashad for providing the technical and subject matter expertise on this. I would also like to thank the Chamber for actually hosting the session in association with JMMB Investments. And until then, please check out our site www.chamber.org.tt in case that you missed it, and you could also look online. We just want to say as well, this would also be posted in association with JMMB. There's the branding there as well, so feel free to contact either Roshan or Adeline for any further questions or advice that you may not have gotten to post on the chat. And once again, thanks on behalf of both the TNT Chamber and JMMB Investments. Until then.